So we have 7 deals on the site.
Okay.
Those deals are, anywhere in, all over the country, from California to the East Coast, and some in Texas. They're all 506c. Um, we connect the sponsors with the investors. We don't handle any of the cash flow.
All right, guys, welcome again to another amazing episode. Today we have, who do we have today? We have Kam Zainabadi. He is the founder of Park Place Investments. Essentially, he wants to do crowdfunding for the MLS, so create like a crowdfunding platform that's going to be equivalent to the MLS, and people could go in there and choose their investments and go ahead and invest. So bringing it to mainstream is what I'm gathering. So we're gonna go ahead and dive in a little bit into your background and let us know exactly how you started and then how you got to where you're at now.
Absolutely. Well, thank you guys for having me on the show and letting me talk about crowdfunding and also my company Park Place. As far as how I got into founding Park Place, is I always been a real estate investor since I became a professional and made some income. I kind of coincided with the market crash in 2008. So I was working in Riverside, and the market crashed 60-70%, and like every block there was, in a 20 house block there was like 12 houses that were like, in for sale or foreclosure signs. So, I knew that this is just an amazing time to get in there. Whatever money I had, I kind of used the leverage that you have with real estate to purchase. And then, the tenant, people needed a place to live. So there was a really good market for rental. So I rented that really easily. And then the market recovered. I used the equity from the houses, the 1031 exchange, into smaller units, 4 units or so. And then I got into kind of, as you kind of grew up in the world of real estate, you kind of try to move up to your, to the different asset class. Started thinking about commercial real estate, got introduced some syndications, got into investing with syndications. And most of my exposure was through friends and family. Honestly, I didn't even think about investing in syndications outside of like kind of Southern California, because it's just, it's a lot of times people just get used to investing where they live. And I think that's one of the issues with real estate is just, people always kind of get, they'd like to invest within a certain radius, which I think is a mistake. And from real estate, in syndications, I got into investing through crowdfunding platforms like Fundrise and things like that. And then at the same time, I was investing as an angel investor in Silicon Valley companies through my associates. And then, I kind of had an aha moment in one of the discussions I was having with my friends that happened to be in tech startups and things like that. I said, you know what? I always thought, why isn't there like a platform that just like is like an MLS, like Redfin or LoopNet or something that's out there for all the syndicated deals that are out there in the United States? And well, then I started learning about, there needs to be certain SEC and FINRA regulations and things like that. But, at the same time, there's a lot of opportunity out there, both from an investor's perspective. I always thought about it from an investor's perspective, what I want, because I've had this vast experience just in different levels of investing in real estate. I said, as an investor, I want to be able to go on this website and a platform and look at all the deals that are out there that I could, not always California is the best place to invest. I'm in California, as you could see, like right now with what's happening is like the primary markets are kind of, people are moving out of like California, New York, and going to some of the secondary and tertiary markets, like, the Carolinas, Texas, these areas. And I wanted to have an opportunity to participate in syndicated deals. At the same time, as you get into investing with syndications, you understand that, as a professional, sometimes it's easier to participate in larger deals through syndications because you don't have a capital to invest in those larger asset classes. Like, you can't buy a 300 unit building by yourself, especially in like California. It's almost very difficult. So by the nature, you're going to either create a joint venture, which then you get into problems with all the partners, or you let your money as a passive investor go to syndications and let the professional do their thing. And, I participate on the upside, both in the, when they sell the property and also through the payouts for the rent. And so that's really where I was at. And the Park Place kind of our mission is to become that. So our primary goal is connect syndicators with investors and vice versa. And our secondary goal is for syndicators to learn about general solicitation, how to market their deals, and really achieve their goals.
No, I love it, man, because, this is something we talk about in our podcast from time to time, and that we've talked on other podcasts about, but is exposure, right? So coming from the non-accredited investor point of view, and from an upbringing where we never were raised on how to build money, how to accelerate wealth, how to invest, correctly, especially non-traditional investments or private investments. And it was part not because no one really showed us as well, but it's also part because no one in our circle and I never had the exposure. And I think what you're trying to build will allow more people to be exposed to those investments that could accelerate wealth generation and multiply their money quicker, as opposed to a traditional investment, which is not bad. But the more you realize about these larger deals, the quicker, you realize there's some pretty significant returns if they're done right, as opposed to other deals. So I really like that. So because you mentioned the rules, the SEC and all that, how are you working through that? Because obviously you can't just market a deal out to credit investors. Is it just that you're having verification as people come to your website and then they're joining in? How is that process, that piece working?
Sure. Well, ultimately, the due diligence has to be done by the sponsors because they're the ones that are gonna when the investor makes the check out to them. Well, they have to be sure these guys, if they do go through like a 506C exemption, which does require accredited investors, they have to be sure that they're an accredited investor. Having said that, we have an accredited investor check in our site. It's either done through one of several ways. One is the easiest way is when your accountant or attorney could write an attestation or certificate that you're accredited investor. The second way is through a third-party site, or the other one is if you send your tax returns, which most people don't do that. Most people usually have a certificate if they've invested before from their CPA. That's really the 506C. Now, there's other ways to invest as a non-accredited investor in crowdfunding, which is either it's typically through either Reg A plus or through Reg CF, regulation crowdfunding, which allows non-accredited investors to invest in deals, whether it's real estate or any other type of like startups or things like that.
So, because you can't really market to accredited investors, right? How are you doing that piece? So because you have a website and I have a deal and I want to put it on your website, but the only people I can really attract is accredited investors in the 506C.
Yes.
So is your website only tailored for accredited investors?
Yeah, the website is tailored exactly for accredited investors. Having said that, we have developed a partnership with a funding portal and a broker dealer, which allows Reg CF, which allows non-accredited investors to invest. Reg CF, whenever you go, the SEC has made it clear that when you only go towards accredited investors, the accredited investors are sophisticated enough to be able to do the due diligence. So there's not that much there's still regulation, but it's not as much as when you go to mom and pop and you want to get retail investors or non-accredited investors. For example, if you want to go through Reg CF, you can't just list it yourself. You have to go through certain due diligence processes that a funding portal that's registered with the FINRA has to comply by. So yes, we can't do that on our site, but we have developed relationships with funding portals that, for example, let's say a part of your equity stack, you want it to be accredited and part of it non-accredited, you could do that. Now, right now, Reg CF, the limit is about $1 million. So most raises for real estate have not really used Reg CF. However, SEC just made a ruling that in a couple of months, hopefully, it's going to get raised to 5 million, which it makes a lot of real estate investments in reach, and that kind of becomes more feasible when it's 5 million as opposed to only $1 million. So yeah, it is, to answer your question. It's difficult to, SEC has made it clear for if you go to non-accredited investors, you need to do a lot more due diligence.
Okay. No, yeah, and that's why I was asking. I wasn't sure. You said you wanted to be like the MLS, so I mean, I wasn't too sure if you were allowing non-accredited investors or if it was just for accredited. And that's what I wanted to really dig into, because I would like to see a website where you're not marketing, but you can also have non-accredited investors in it. Because like I said, to me, the whole exposure thing is a big deal. I get it. There's the law, right? And there's, you can't do certain things, but I wish I would have known this years ago, when I had.
I think what Oscar is going in, or I think the idea that I would love to see one day is the fact that you might be able, just like Zillow or LoopNet or whatever, that you go in there and you see these properties that you probably they're not within your reach, but they're out there, and that you start learning about the process. It's like, well, yeah, I know it's there, and I see these deals. I might not qualify right now, but it's existent and it's within reach eventually if I get myself to this. But it's so I wouldn't say hidden, but unless you're looking for it, then you don't have access, or you don't have, unless you have the network to that are talking about it, or talking about these deals, you don't have access to that type of, deals in
But I guess for me, the thing is, I wouldn't want to, obviously you don't want to market it because you can't, but if you can somehow find a way to allow people that exposure to it, so that even if they don't invest now, they invest when they do become accredited investors. Yeah.
Well, I mean, this is a little bit of, vagueness in the SEC rules, but you could look at the deals, but you can't invest in them. That's really what it is.
Yeah.
I mean, it's not like you can't even, it's not like it has to be invisible to non-accredited investors, but at the end of the day, when you make that page at the check to the sponsor to invest in the deal, again, I'm not an attorney. I don't want to say something that's beyond my scope, but I mean, at the end of the day, that's what's really what it is, that you can't make an investment in a 506c exempt deal without being an accredited investor. Now, does that mean they really didn't say exactly at what step you can, like, can you not even look at the deal? Of course you can. I mean, I think what they're worried about is really to not invest unless you are an accredited investor. So, I mean, going back to what you were saying, certainly you could look at the deals. I mean, but, for example, look, if a lot of these sponsors advertise on Facebook or Instagram, and it's not like the retail investor is not seeing the actual deal, but then they have to have a process to actually vet. And the vetting process used to be, for example, for 506B, which is not general solicitation exemption, you could have some retail investors in there, but it wasn't as difficult. It could be a self-attestation, like, I could say I'm an accredited investor. You didn't have to show all the documentation. But with 506C, it's become that they added another layer to be sure that, it is definitely a check, a verification.
And that's to protect the investors.
Exactly.
At the end of the day, to protect the investors.
Yeah, it is.
Exactly. So yeah, to answer, you could look at it as you don't have to be an accredited investor to look at these deals that are out there. You just can't invest.
Got it.
I know. I guess I'm just mad because I don't like the government telling me what to do.
I hear you. Yeah. Everybody, there's different level of tolerance for that. Yeah.
Yeah. I would like all options, not just real estate syndications, to be available to me, so I can make a decision where to put my money.
Well, unfortunately,
they're protecting me.
There were a few bad apples that this is a history of it goes back a long time ago that kind of messed it up for everybody else. That's why there was these rules in place.
Yeah.
There was mostly for stock market initially or stuff like that. Any type of security has to go through the same thing. And a lot of investors, they really got messed up from what they were doing. So these precedents were made.
Can you explain to us the process and the differences between like a regular syndication and crowdfunding for real estate?
Well, it's crowdfunding is kind of a vague term. It's anytime you go out beyond your network of friends or people that you've had prior relationships. You could define it just like that, or you could define it more like, syndications usually have a minimum that's higher and out of reach for investment than, sites that only want some sites only want $1,000 to invest in real estate. So it's kind of using the power of the crowd, lower investment minimums, and going to the general public to invest, to get investors. I think that's a really easy way to define crowdfunding. Now, again, it's vague. Everybody defines it a little bit differently. And then to make it even more complicated there's a regulation, crowdfunding, that was started by the Jobs Act in 2012. But that's not limited to that. You could have Regulation A sites that do crowdfunding, or you could Regulation 506C that does crowdfunding, and they're not term crowdfunding. So it's kind of like confusing a little bit. But I think SEC is doing more and more trying to consolidate everything, make it easier. Actually, that's their goal from my reading and looking at their briefings. They want to make it simpler. And they are doing that, actually. So there's steps. They're making it easier to be called an accredited investor, for example. It's not just amount of income you have or asset, but now certain, degrees you have or licenses you have, like Series 65 would be one. Or, for example, you work for a firm that has a certain criteria, so those things are becoming easier to become an accredited investor.
So let me ask you, as far as, we talked about it from an investor perspective for your portal, talking about it from the sponsor perspective, what do they need to do to get on Park Place? Well,
you could, they contact us. They find us either through the web, through the platform, or LinkedIn, or Facebook, our social media presence. And then we kind of set up a one-on-one conversation. The deal goes to an investment committee. We make sure they're 506C, and then we go through the process of listing the deal on our site. We have a one-on-one meeting for them to list their deal on our site. However, if they want to list the deal themselves without having that hand-holding, they could do that after that process. Then after that, we highly recommend creating a video podcast to talk about their deal, because that really helps kind of connect them with the investor, especially if the investor's never seen them. That kind of creates that human interaction and psychology and emotional connection.
Like a webinar.
Like a webinar. And then we have a live webinar, a question and answer webinar too, eventually.
Nice.
So that's really the process. Yeah.
Okay.
And then we also provide opportunities for marketing beyond our platform. We have partners that do marketing for us, even a higher level of marketing if they want to. And there's other services, legal services. For example, a lot of sponsors, even sometimes they don't know that they have to be 506C to do general solicitation. So those regulations you have to really comply by. So we have legal partners that security partners, security firms that provide that, and other opportunities really. So we're kind of creating community for that sponsors to be able to really take advantage of our platform to its fullest and ultimately reach the capital raise goals.
No, I love it. So what, as far as, coming on and everything, I mean, you evaluate them. Are there any fees associated? Is it, and then to date, what are we talking about as far as capital raise within your platform? Or is it just recently starting up that no one has done an actual raise on there yet?
So we have 7 deals on the site.
Okay.
Those deals are, anywhere in, all over the country, from California to the East Coast, and some in Texas. They're all 506C. We connect the sponsors with the investors. We don't handle any of the cash flow or any of the money. We want to have the sponsors to have the independence to keep do whatever way they have in the past to be able to do the deal flow. So we don't have an exact track of how many investments have been made, but there's been definitely investors that have contacted the sponsors, and ultimately we don't want to be in the finance fintech part of it. We don't want to. We want to just create a community.
Got you. Okay, now I'm really so that's where you're different from Fundrise and all these. You're not in the transaction piece of it. You're just providing there, and people bring in information, and if they wanna, they provide the email or the phone numbers. Let's talk. Okay, that makes more sense to me.
Yeah.
So then for your website, what is your strategy? I know you want to create a community then of deals and presentations to accredited investors. So what is your business strategy with your platform? How does your platform make money?
Well, right now we're not really looking to go positive cash flow right now. We're just building partnerships. Our goal is not to be too greedy, create the partnerships, because sponsors, by listing their deal on our platform, create as much value for us as we're providing for them. So, gotcha. And at the same time, we don't want to charge something and not deliver, right?
Absolutely.
So we want to be sure that we have everything set before we start charging people. And that
And this is the reason why you vet the deal so much.
Yeah, the deals have to be, in accordance to SEC regulations. They have to be experienced sponsors. Obviously, those things are important. As far as monetization, there's many ways to monetize it. I mean, as we create, our accredited investor base is growing to about 200 now, and it's only the site has been live about only 5-6 weeks. So, we're creating that traction, and as you can imagine, if we've been on for a year or two, it's gonna just grow exponentially. Yeah. So our goal is to really create this partnership, make deals happen, bring different people together, and make things happen. And eventually, we think that there's always value, right? Look, if you look at these large companies like Amazon, Facebook, they weren't really making any money, right? So they created a community. So and the way we've structured it is, let's not be cost heavy, keep our expenses low, make sure that everybody's happy, and it's an amazing community we have in the real estate world. And let's bring people together and think magic will happen. So, and there's many ways to monetize. I don't want to bore you guys. And we've gone through it with our team, and we know how to do it. Right now, it's about team building.
No, I love it, man. I love it. And then, so you mentioned, experience the sponsor, and you're also vetting the sponsor a bit. And I know like Fundrise and these other websites, they have a lot of stipulations. You probably need to have like 50. I think the minimum is like 50
AUM.
AUM, right? Assets under management. Is there a minimum for yours as far as they need to come on, or is it more about the deal that they're presenting, or how do you look at it?
No, we don't have a 50 AUM. We're not even, we don't want to be in that league. We want to be with the smaller syndicators, not their first deal. Obviously, there's many criteria we have, but certainly 50 AUM. I like all these crowdfunding sites, and I don't want to compete with them.
Yeah,
because I've invested with them. They're great. I don't want to play that game, right? Like imagine Facebook didn't want to play the MySpace game, right?
Mm-hmm.
Yeah.
So that's what it is. I mean, I'm old enough to know MySpace was the thing, but Facebook saying let's work on a different crowd. Let's have different clientele. Let's bring different investors into the ball game, right? And go from there. And that's we want. We're not trying to compete with the larger guys. And the evolution of the larger guys is eventually going to be a RIT model. And most of them have transformed into that. Only one or two of them have stayed a kind of bring a different third-party syndication in and promote their deal. Most of them are going towards, a fund model, really.
Fund or REIT,
yeah. And because, when you get it, and again, that's their mission, that's their goal, that's really not in accordance or compatible with the mission I have and my company has. We want to democratize it. We want, as from an investor standpoint, I think investors are smart enough to pick the right. If they talk to the sponsors, they know which ones to go with and not. And there's always, if you go to Facebook, there's communities of these different crowdfunding sites that investors talk amongst each other, right? So even though the sites are vetting deals, at the end of the day, a lot of times investors say, you know what? I don't trust what these guys are saying all the time. Let me go to my community. And that community feel is always, I think that's key. Whenever I want to invest in a deal, I always talk to my friends or people that I think they're smarter than me. And that doesn't change. That let's say, if Park Place vets the deal, doesn't mean you should go and invest. You need to do your own due diligence. And
Absolutely.
That's what it is.
Yeah, no matter what, the responsibility falls on you to do your own due diligence. The reason I ask is because, we have a lot of newer syndicators, and us ourselves, we've raised capital, but we're newer syndicators, and we've done JVs. Like our portfolio is more through JV than it is through syndication. But we want to know, you obviously don't want someone that's never done a syndication, but from what I'm gathering, is on a case-by-case basis.
I think so. For example, let's say you come to us and you've done JVs before, you don't really know the site. You go, well, I want to do have this, multifamily or whatever type of deal. I want to syndicate it instead of JV. Obviously, you got to be sure that that's what you want to do, because if you know how to do JV, you may not necessarily know how to do a syndication, but there's a lot of cross compatibility and things. So, I would tell you, listen, I have a great, we need to discuss how you're going to do this. And we have real estate attorneys, if you don't have your own, that do syndications all the time. So that would be the first step. The second step is finding out whether that real estate attorney could do all the security laws, right? Now you're dealing with not only creating a syndication, but now you have to know what exemptions you're going to go with. Are you going to do general solicitation? Are you going to not? Is your model go towards retail investors or not? So those things have to be, sometimes real estate attorneys are good at security law and sometimes they're not. Sometimes they refer you to a security attorney to figure that out. And that's the starting point to start a syndication, and then you have to prepare a PPM, if you do a 506C, for example.
No, absolutely. Yeah, get all that documentation squared away.
Yeah.
But that's just what I want to get out there, because if there's anyone that's listening like us, I'm definitely interested in talking to you in the future. But if there's anyone out there, hey, it's case-by-case basis, have a deal, have your paperwork documentation in order. Obviously, you should have some kind of experience with larger deals, but at the end of the day, you're going to roll through that and you're going to do case-by-case basis on, hey, yeah, we think this person is qualified to raise capital on our site, from what I'm understanding.
Exactly. That's right. And yeah.
No, that's awesome. German, you got anything?
No. I like it. The fact that you guys are building the community, in creating opportunity for even the smaller guys to come into this sector of real estate in investing, I think is great. It's an awesome idea.
Yeah. You could be the bigger pockets of syndication, you know?
Yeah.
That'd be cool. And that's something, you know, I tell my brother all the time, because like they're tailored more towards a newbie residential investor. There really isn't a platform for larger multifamily or syndication or REIT investing
Yeah.
community, right? Like, you know, that's kind of a different thing. So I'll throw it out there. Maybe that's what your website does too, you know, create that community that way.
Yeah, absolutely. I mean, we wanted to make it for, when you don't know all the security laws, initially my idea was, why don't we just throw it out for everybody that just wants to find partners? But it's, there's a lot of regulations,
There is.
and you got to be very careful. And then you have to kind of, the idea evolves. And every time you start with an idea, you got to be sure that all the ducks are in place, because if you don't, then you could really mess up big time, So you got to be sure all that is, whenever you offer these investments, you got to be sure SEC is always looking. So you got to be sure, and you have to be in compliance.
Yeah, absolutely. All right, man. Well, Cam, thank you so much. German, do you have any other questions?
No, I don't have any questions.
No, I think that was great,
with
man.
the idea.
Thank you guys for having me. The website is www.parkplaceinvestment, there's no s.com. I hope to see you guys there. And we're also on LinkedIn, Park Place Investment. Appreciate the time and giving me the opportunity to talk with you guys and your listeners.
No, absolutely, man. And we'll put all those links in the show notes so people can reach out. We really hope that we can expand the visibility of your website there, because I think you're doing a great thing, and we're excited. We're glad to have you on, and even more excited when this episode airs, because I know I'm definitely interested in checking it out, and I'm interested for other people to at least look at it, even though they might not be able to invest.
Exactly.
So, we're really excited, and thank you for that. And for all the listeners out there, give us a 5-star review. Show some love. Send us some messages. Let us know. We've been loving the great feedback lately. So we'll keep at it, and we're out. Thank you.
Thank you so much, guys. I appreciate it.
No, thank